Are you stressed out not knowing where to find distressed, off-market, high cash flow properties in high-growth areas? What about the best strategy to build a wealth-generating portfolio? Look no further. Dragan Domovsky of Buyers Agency Australia can help. With over 20 years of experience as a property investor, Dragan is a qualified property investment advisor and expert buyer's agent, so he knows how to find the best deals and negotiate for his clients. Right now, he's offering a free 45-minute strategy session to get you started, normally worth $500. Text the code BAA along with your name and email address to 0405 105074. That's 0405 105074. And take advantage of this offer. Take control of your financial future today.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby, and recently I sat down with one of my colleagues here at Momentum Media. She is the managing editor of the Mortgages Suite, Annie Kane, and we were actually talking on one of her podcasts, Mortgage Business Uncut, to discuss from a little bit more of a financial sense what is coming up this year. And it was ahead of February's cash rate call, but there is so many insights in here about what the Reserve Bank is doing differently this year and what's going on in the West Australian property market. It's well worth a listen. I hope you enjoy.
Grace, thanks so much for joining us to talk about all things property and mortgages today. How are you doing?
I'm good. Thank you for having me. It does feel cool. I feel like the beginning of February, we've had January to settle into the year, and it's nice to reflect on what we've seen so far this year, because it is going to be a pretty crazy year.
I think it's been amazing. And because especially the last few weeks, well, really last week, we had a lot more data coming through, closing off the year 2023 and looking at what happened last year. And there's always a delay when it comes to data analysis. So it's good to be able to have had that come in now and look at what people are expecting to see in the year ahead. So we thought, who better to talk to about property and what we expect the property market to do than you, Grace? But as always here on Mortgage Business Uncut, we'll start off with the auctions. And this is the first week we've had full auction data come back through CoreLogic. And what an auction week it was last week, because it was actually the second busiest start to the auction season on record. And it was only surpassed this time last year. So the first week of February 2022. And if you recall, we were having that bumper year in property buying in late 2021, early 2022. So the fact that we've actually had the second busiest start to the auction season on record is amazing to me, given the fact that, you know, the first few weeks of January, it was sort of trickling along like hundreds of auctions, but now back up to the full flow of things at 1,671 auctions last week. It's amazing. And not only that, but also seeing the preliminary clearance rate ticking back up again as well. So we've been towards the end of the year seeing clearance rates around the sort of high 60% mark, now back up at 73.9%. So that's also really good news, showing how much demand there is at market at the moment. I mean, obviously having a big start to February means that everyone now is focused on what will be set for the weeks ahead for the property market season as we come into the sort of late summer, early autumn period. What do you think the property market is going to look like in the next few weeks, Grace?
I mean, it is obviously crystal ball gazing, Annie. I'll give that qualifier there, but it was a pretty amazing week as far as auctions go. And I think it is interesting to see that we actually have seen from the real estate side of things, a lot of the networks have been really buying into starting the year strong. And so many of them were having massive, massive auction days to finish up January. And I do feel like that's probably some of the data that we are seeing, because it is an absurdly strong thing to be seeing end of January, beginning of February, especially when we had CoreLogic come out at the end of last year saying, we don't know when we'll come back with our auction results. It'll depend on what the market is doing. This is definitely has started with a bang. And I think it is something we're going to continue seeing through February. Obviously, the rate decision will impact consumer sentiment moving forward. And we did see a lot of people that probably didn't pull the trigger November, December onwards, not being sure about what was going on. And there's probably going to be a little bit more certainty moving forward into 2024 now. So
yeah, absolutely.
pretty good start.
Pretty good stuff. And actually, I think it's double the amount of auctions we've had over the last few weeks. So
yeah.
I think we've been sort of ticking along around 800 or something. So actually having 1,671, massive. Of course, as I said, all the different markets sort of back to normal behaviors as well. When we had lower numbers in the first few weeks of January, some of the other markets are sort of taking the mantle from Sydney and Melbourne is usually the one where we see the most auctions. And that really was the case again last week. So if I just quickly run through the auction clearance rates with you, just to keep us across of what we're seeing. So starting with Melbourne, which had the most, 603 total auctions. Of the results collected so far, there's only been 488 collected so far. And that cleared with 71.9% success. So good numbers down in Melbs. And then up in Sydney, 562. So the second busiest auction market last week. Of the 434 results that have cleared so far, that gave us a clearance rate of 76.3%, which is much higher than we've been seeing for Sydney. But it isn't the highest. Adelaide's still winning the title for highest clearance rate of all the capitals. They had a 77.6% clearance rate last week, but again, only 98 auction results collected so far of the 159 they had scheduled. Canberra actually is taking the title for the highest clearance rate with an 80% clearance rate, but they only have 75 auction results collected so far of the 132. And that's followed quickly by Adelaide, who had 77.6% clearance rate of the 98 auction results collected so far from the 159. Perth and Tassie, as always, very few auctions taking place in those markets because they're not really massive auction markets. I think there were only 2 collected so far in Tassie of the 3 that actually took place. And that's 50% clearance rate. And down in Perth, over in Perth, I should say, there's only been 3 auctions of the 9 collected so far. And that's a 33.3% clearance rate. So if you take out the anomalies of the 2 markets that don't really do auctions, that's a really strong start to the year. And I think this just really goes to show the optimism that's in market and comes off the back of that surprisingly strong end to the year that we saw in 2023. Now, Grace, you would have been writing heaps on SPI and REB, our 2 property titles, and Property Buzz as well, about what has been going on in the property market over the calendar year 2023. And I think it's good just to kind of look at that pent-up demand. So if we look at December, for example, we were seeing right up to that Christmas break, really, lots of auctions still taking place, lots of popularity and trying to get things done before the holiday period. But I think now, looking at what's expected to take place in the next few months, that's really going to be an impetus that keeps going. What for you were some of the call outs for the year 2023?
I think one of them was really from the beginning, I guess, was the fact that the continuing rate hikes did not probably quell or quash the demand to the extent that a lot of the economists would have forecasted it to. We were still seeing so much activity, even during those months where we did see rate hikes. And to see that sort of come through the whole year and people still wanting to buy and sell property right at the end was insane. It kind of broke the rules that people have just had in their heads of what does happen when it comes to economics 101. So that was really, really probably for me, that standout feature of 2023, because it didn't happen the way that it necessarily should have if you were looking at old textbooks of years gone by. And then really, I mean, we always talk about having multiple markets around the country. So if you do see some of the markets struggling, you see the other ones, you see the other ones working really, really well because people can they're looking at things going, that's too expensive, Sydney, Melbourne, I can't really afford that. They are looking elsewhere, but they're still wanting to spend their money. And that, I guess, just really hits home how big the great Australian dream of property ownership is and continues to be moving forward.
Yeah, absolutely. And I think just looking at, what some of the analysis and CoreLogic economist Caitlin Ezzy was saying, she was sort of, looking at the last quarter of 2023, and she was saying auction numbers actually rose 15.4% quarter on quarter and 19.6% compared to the 2022 spring selling season. And then she was sort of looking at the fact, while of course January was quieter, it's been quite a strong start to this year, to 2024. So really looking at understanding what the market looks like. And as you mentioned there, lots of change in where people are buying. I think in 2022, 2023, we saw a lot of activity in Brisbane and Adelaide, but it seems to be that Perth has been the standout performer for a lot of people, not just for owner occupiers, but of course for investors as well. And just as you were mentioning there, partly because a lot of investors in the Eastern Seaboard thinking Sydney and Melbourne just a bit too expensive now, and looking where else there's a better deal and where there's still good yields. So we did see that actually Perth last year was at the top of the leaderboard for home value growth because of this strong demand. But also it's the place where most investors went in 2023 as well, which I thought was really surprising to me when I was looking at some of the mortgage lending statistics that came out from the ABS. But we'll get into those in just a moment. So just looking at the figures that came out from the Australian Bureau of Statistics on Friday, Grace, and I was really surprised to see that actually Perth, or WA, I should say, was the market that had the largest proportion of investor activity. And we're basing that on value, not necessarily on number. But looking at the value of mortgages written to investors, WA was the only state to actually see investor mortgage volumes increase in 2023, which I thought was fascinating. And I think part of it, having talked to some people around why they think that is the case, is because of this home value disparity across the country. You mentioned about different markets, and I think that's 100% the case. I had a chat with the Real Estate Institute of Western Australia's CEO, Kath Hart, and she was saying, of course, lots of Eastern Seaboard investors are looking at Perth because, it has really good yields. And of course, the value of the market is still pretty good. You can buy a really nice property in Perth and rent it for cover off your mortgage repayments pretty much, because it's such a good rental market with all of the activity over in mining.
Yeah, Annie, it's one of those things too, and I can't give too much away because we've got our Fast 50 report coming out very, very soon, which does divulge that, it is a trend that's probably set to continue with WA, because there are so many suburbs especially in and around Perth, that have really, really good links into the CBD, into lifestyle amenities, all the things that people want near them where they live, for house prices that aren't really too far above $500,000. People can get a standalone house. There's room for cars. There's probably a couple of bathrooms, a few bedrooms. You can't get that kind of value now. When you're looking at Sydney or Melbourne, Brisbane is also exceedingly becoming out of reach for a lot of people who are in those income brackets. Like, it's just not really feasible. So then when you've got investors that are trying to work out where they can get good rental returns for the price that they're paying, the rents, people are happy to pay a little bit more rent if they're getting more bang for their buck too. So it does make sense that we did see so much activity across on the West Coast, especially think about how many property price gains people would have seen, how much equity people would have been able to unlock from the gains that they have seen across the East Coast. So anyone who's got some of that money to maybe be playing with is obviously going to be looking for the most bang for their buck that they can get. And at the moment, it's looking like that is across on the West Coast.
Yeah, absolutely. And I think, even people who living in WA, maybe thinking about downsizing or upgrading, it was a great time for them to sell as well. I mean, home prices went up, according to CoreLogic, 15.2% in WA over the year. So if you're thinking, maybe I should move into a smaller apartment and, I'm an empty nester, that's a great market for you to be exiting in, and to then actually take advantage of those price increases and the demand too, of course.
It's even crazy to think about. I had a few conversations the back end of the year about just how little supply there was in the West Australian market over the year as well. So the fact that there has been so much loan activity when there's been, I think, something like a third of the usual transactions taking place in that market, there's a lot going on. And that's why prices have been so good over there and so strong for people who are operating within that market.
Absolutely. And I think, we've seen this across the board. And of course, expectations are that it will continue to be that way this year. The other sort of auction markets that are doing really well, I mean, I should say as well, the difficulty we have with Perth is because we don't have auction figures. We don't tend to talk about it too much, but it is doing really, really well. Melbourne is one we talk about the most because, of course, they generally have the most amount of auctions. And I think, again, last year they had the most amount of auctions. So something like 41,300 homes went to auction in Melbourne in 2023, which was down on the previous year, but still pretty good. And similarly, I mean, we saw Sydney auctions drop quite a bit because they had, while they had the largest improvement in annual clearance rates, I think there was something like 36,000 homes auctioned with a clearance rate of 66.9%. And that was because of this house price crunch that we're experiencing here. So really interesting to see how the property market had fared over 2023 with all this new data, both from property bodies like CoreLogic, but also from the ABS looking at mortgages. And I think that's where we've been finding some real interest. And not just on an annual basis, but even from the ABS, we were seeing that December mortgage values actually dropped for the first time in 5 months, which surprised me given the demand and market. And, everyone's saying property sentiment is still high. I thought it was surprising that mortgage lending actually fell. But, as I say, fingers crossed that we'll start to see improved activity this year. And we are also still comparing to a very, very high property market. So always difficult. And we should take it with a pinch of salt when we're comparing December 2023 figures with December 2022 figures, just because December 22 was, again, a very popular market.
That 2022 market as well, Annie, so many real estate agents didn't take a break that year. That activity was going pretty much up until Christmas Day, whereas we just didn't have that same activity last year. And I think that speaks more to the normalization of the market than anything that is necessarily concerning. Maybe a little bit back to normal, back to then, January being gearing up to quite a big end of month / early February, looking ahead. And I think we will start seeing a lot of that activity pick up again. So yeah, while it was, I guess, not as great as the years gone by, I don't think that's something to be worried about, particularly when we were still, there had been a rate change back in November as well, which would have had an impact on those December figures. A lot of people just going, let's hold off and see what happens. And then obviously we've seen the inflationary figures have come out since then. We've seen the retail figures come out since then. And I don't want to get too ahead of myself with what we're about to be talking about, but that again would have changed people's feelings around whether this year will be a good time to be getting into the market. So
yeah. You're absolutely right there, Grace. Of course, we had the rate hike in November 2023, raising the cash rate to 4.35%. And everyone pretty much at that time was saying this is probably going to be the last one. So it might have boosted sentiment. And we'll talk about what's going to be happening with rates and what we expect to see in the year ahead in just a second. So, Grace, Tuesday, the 6th of February, marks the first RBA cash rate decision of the year. And remember, everyone, this year we're at a new format for RBA cash rate decisions. So rather than meeting 11 times a year, they're going to be meeting 8 times a year this year. February is the first one. And by all accounts, everyone pretty much is saying a hold is expected given those high inflation figures. So if you look at the RBA rate tracker on the ASX, I think it's only a 5% response saying maybe they'll cut. 95% of the market saying definitely a hold. All 4 major bank economists have suggested there'll be a hold. And if we're going to be believing forecasts, which we know are very tricky to do at the best of times, most people suggesting we might start seeing cuts towards the end of the year, the final quarter of the year, depending on who you talk to. There are some economists who are saying it might be a little bit earlier than that, but most people looking at September, October, November time for around that sort of 3-month period, we might have our first rate hike in that quarter. So really interesting to see. And of course, we'll run through the format of what the rate decision, the monetary policy decision is going to look like moving forward. But for you, Grace, what do you expect to see happen?
I think it will be a hold. I think we've talked previously. We've both had so many conversations around people saying that the RBA was very quick to act on the inflation figures going up. It's not going to be nearly as quick on the way down. It makes sense. The inflationary figure is still not within that 2 to 3% target range that the Reserve Bank of Australia is aiming for. So it would be probably a little bit irresponsible, as much as everyone probably wants to see some more movement in the figures. It would be not the most judicious decision to all of a sudden come in with a rate cut at the beginning of the year, because what's happened in the past when we've seen rate cuts or even holds, so much more stimulation of activity. And that is exactly not what the Reserve Bank wants at this point in time. So I think the first half of this year will stay pretty steady, and then we'll see some, depending on what the figures look like after that.
You're absolutely right. So the CPI data that we had come out last week showed that the final 3 months of the year closed with a 4.1% annual CPI figure, way still above that 2 to 3% target range. So not expecting to see any cash rate cuts based on the commentary from the RBA saying they really are targeting that before they start talking about a cut. So it would seem unusual if they did. But I think looking at, what the economists are saying, so Westpac, for example, their economist Lucy Ellis said that, of course, while we did have that hike in November, that already still we're seeing such strong demand in market and people now thinking we're at the peak of market. So really we might have a couple more sort of, lenders yet to pass on that rate hike to their borrowers, but generally sentiment is pretty high. So I think generally CBA as well saying it pretty much rubber stamps the fact that the RBA is going to be holding at the February rate decision. Talking about, again, they had a really aggressive tightening cycle. Remember way back when they said we're not going to start raising rates until at least 2024. And of course, we now at 4.35% at the beginning of 2024. So that obviously did not matter. That did not happen as the way that they expected. And I think this still now makes them a little bit nervous about going against market expectations or doing anything out of the ordinary. I think similarly, I think they'll probably hold. ANZ suggesting that cuts probably not coming till the end of this year. And again, I think, falling inflation rate is good. I mean, we can't get too carried away yet by talking about falling inflation because it is still growing 4.1%. It is still up rather than disinflation. So I think that's something to bear in mind as well. We can't get too excited just yet because the cost of living is still a major problem for people. And as you mentioned there, and as we talked about earlier, the fact that the property market is still doing so well, even after this aggressive tightening cycle, would probably want the RBA to cool the market down a bit further before they start looking at cuts. So I 100% agree with you there. And as I said, a slightly different way of working this year for the RBA, following the RBA review. They actually are going to have 2-day meetings this year. So they're actually meeting today and then announcing tomorrow, following their second day meeting. And of course, the announcement will still come out at 2:30 on the second day of the meeting, so tomorrow. But they'll be holding a media conference at 3:30. So this is going to be exciting for us. We actually get to hear what their thought process was. We also are expecting to see how the board voted in terms of what to do. I'm not sure if it's attributed to individuals. We'll have to wait and see. I think it's sort of just doing it bit by member number. But that will be really interesting. And to have immediate access to the governor and to the board to talk about, what does the cash rate forecast look like for the year ahead, and to have those answers are much quicker because, of course, a statement of monetary policy doesn't come out normally for 2 weeks after the meeting. So to be able to get some instant answers will be fantastic for us. And of course, we'll be bringing them on Mortgage Business and SPI and REB.
Given they were so, they were really taken over the coals for their comments around that forecasting that they wouldn't be lifting rates until 2024, and now they're just giving us even more media access. So it does feel like a bit of an interesting strategy, but obviously working in the world of news, it's great for us to get more immediacy around that and their ways of thinking and the transparency of that. So watch this space.
Watch this space. And of course, it's a live meeting in February. And that means we've got that quarterly CPI data so they can really look at in depth what's going on. And they'll have longer meetings as well. We've got new members coming in to the board to bring in some sort of more outside experiences. Of course, there's always been external members of the board who aren't necessarily central bankers, but it's going to be really interesting this year, I think, to report on this and to see what they've been doing and why they're doing it before we get I think it's a statement of monetary policy earlier. I meant the minutes of the monetary policy meeting. They come out about 2 weeks. And then we get the quarterly statement as well, which will come out in this month in February, and then again in May, August, and November. So really watch this space. Grace, thank you so much for joining me to chat all things property, what we've been seeing in the stats on our titles. It's fabulous to get some inside info on what's been happening on property market. You mentioned your Fast 50. When does that come out and when can we expect to see it?
We've still got that a little bit under wraps, but look forward to that. By around the end of the month, you should start seeing that hitting screens near you. It's a really exciting time of the year. There's going to be new entrants now that we've got the report from last year as well. You might see some familiar suburbs in there, but it's just a great snapshot of what to expect from the year ahead and those suburbs that are really poised for growth.
Awesome. And while you're plugging your things, I'm going to plug my things. Of course, if you haven't yet submitted for a Mortgage Business Award, make sure you do. Submissions are now open. It's a video submission. So all you need to do is answer 4 questions in your video. You can use one video for multiple awards, or you can tailor a new video for each category you want to submit into. And then the finalists will get announced in a few months' time, and then the winners announced at the Melbourne Awards on the 16th of May. So if you have not yet submitted your video, get cracking. It's only should take a few minutes. It doesn't need to be Oscar-winning performances either. So do make sure you register for an account on the mortgagebusinessawards.com.au. Start your entry. You can save it in progress and come back to it if you want to, and then submit your entry to be in the running to become a finalist.
Sounds exciting.
Very exciting stuff. And of course, we look forward to celebrating all the winners in May in Melbourne for mortgage innovation and really recognizing those who are making mortgages better. Thanks everyone for listening and tuning in to Mortgage Business Uncut this week. And of course, we'll be bringing you all the news as it comes out. And do check out REB and SPI as well to find out more about what's been happening in the property market, as well as mortgage business for all your mortgage needs. We hope you have a fab week, and we'll catch you next time on the Mortgage Business Podcast Network.
There you have it, everyone. I hope you enjoyed that conversation. We'll be back next week with regular programming from the Smart Property Investment Show. Until then, make sure you're staying up to date for all the latest on our website. If you've got any questions, editor@smartpropertyinvestment.com.au. And actually beyond that, if you are an investor yourself and think you have a story that might be worth sharing, we would love to hear from you. Reach out on that email as well, editor@smartpropertyinvestment.com.au. Until next time, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.